It's been a manic Monday for the stock markets, and not just in India but around the world, as we are seeing that global carnage continuing. Look at this Sensex right now, that's down over 1,000 points. So we saw that slight recovery coming in, but now Sensex is at the day's low as we speak, 1,068 in the red, losing close to 4%. So there is complete bloodbath. As you can see, Sensex is now down to 26,294 levels. Let's pull up the Nifty and see what's happening there. So why is it that we're seeing this morning markets crashing? Well, clearly it's the China factor. We've seen the Chinese markets have plunged as much as 10% in the last 1 month alone, and that impact is showing here on India as well. 4% off straight on the Nifty, that has slipped below the 8,000 mark. Remember, 8,000 was a very, very crucial level for the Nifty. It has breached that level. We saw some slight recovery coming through, Nifty holding on above the 8,000 mark, but now once again it has slipped below that mark. Let's take a look at some of the stocks that are bleeding heavily on the indices, the top losers. DLF is leading the charts, followed by GAIL, BHEL and ONGC. That's on the Sensex. Those stocks all losing heavily. DLF down over 8%. And on the Nifty also, most of the stocks are in the red, losing heavily. The Nifty top losers led by BHEL, followed by GAIL, ONGC and Tata Motors, all dipping significantly. A quick look at why this is happening. If we could pull up the rupee. The rupee today went past the 66 to the dollar mark. It hit close to 66.50s. It is trading at 66.42 right now against the dollar. That's nearly 0.6%, 0.60% off on the rupee. Now, what's happening really is it is the China factor which is playing out across global markets. We know that China has been facing tremendous slowdown. The Chinese government has been devaluing the yuan. The Chinese markets have been tanking. Chinese markets have lost as much as 10% in value in the last 1 month alone. The devaluation has had a ripple effect across currencies, emerging market currencies particularly taking a hit. India, even though we've seen the Indian currency also slipping over 4.5% in the last 2 weeks alone, many analysts still say that India's currency is in a much better position right now compared to most other emerging markets. And it's exactly the same with the stock markets as well. Even though we're seeing this complete bloodbath and carnage on the Lal Street and a 1,000-point drop on the Sensex in a single day, what analysts keep pointing out is that the Indian market's still looking much healthier and better than some of the other emerging markets that have actually tanked even further owing to what is really happening in China. Global markets worried about the slowdown in China, the impact it will have in the long run, and that's clearly having a rub-off effect everywhere. Raghuram Rajan, RBI governor, spoke a short while ago, and he tried to calm markets slightly by saying that yes, the RBI will not hesitate to intervene in the rupee if it is required. The other big important announcement today, of course, was the disinvestment plan for IOC, an offer for sale by the government. Many would say it's terrible timing to go ahead with a divestment plan when the markets are crashing. IOC divestment plan for today, with the government announcing that it will sell 10% of IOC as part of its divestment program. The government is looking to sell over nearly 250 million shares through the issue. Remember, the government holds about 68.5% stake in the firm. The IOC stake sale is the 4th divestment this year, but we'll have to wait and see how much the government is finally able to garner from this divestment, given that markets have crashed. We'll keep bringing you more and more reactions on what's happening in the markets. If we could quickly pull up the Sensex one more time, because it is plunging as we speak. It is now down about 1,082 points. So the carnage in many ways, the bloodbath on the Lal Street continuing, Sensex down over 4%.